Hey everyone, welcome back to the channel. Today we're diving deep into a fascinating biotech stock that's been making waves. Abivax, ticker ABVX. If you're into healthcare investments or just looking for the next big opportunity, stick around because we're breaking down everything you need to know about this company, from its financials to its future potential. Let's get started. Alright, so before we get into the nitty-gritty, let me give you a quick overview of what Abivax is all about. This is a French biotech company focused on developing therapies for inflammatory diseases, infectious diseases, and even cancer. Their flagship candidate, obefazimod, is targeting ulcerative colitis, a condition with a massive market potential. We'll talk more about that in a bit, but for now, just know that Abivax is a smaller player with big ambitions in the healthcare space. If you're new to biotech investing, companies like this can be high risk, high reward, so let's unpack whether this one's worth your attention. Let's start with a closer look at who Abivax really is. Founded in 2013 and headquartered in Paris, France, AbivaxS.A is a clinical stage biotech firm. They've got a small team, about 69 full-time employees, but they're punching above their weight with partnerships alongside heavyweights like the French National Center for Scientific Research and the University of Montpellier. Their mission? To discover and optimize drugs that tackle tough medical challenges. Their lead drug, obefazimod, is in late-stage trials for ulcerative colitis, and they've got other candidates in the pipeline for conditions like Crohn's disease. With a market cap hovering around $7.6 billion and a current stock price of about $118.37, they're not a giant like Eli Lilly, but they're definitely on the radar of investors, and maybe even big pharma looking for acquisitions. Speaking of which, there's been buzz about a potential $17.5 billion bid from Eli Lilly, so we'll circle back to that later. For now, let's just say Abivax is a name to watch in the biotech arena. Now let's talk numbers, specifically revenue. Looking at their income statements over the past few years, Abivax isn't exactly raking in the cash yet, which isn't unusual for a clinical stage biotech. In 2025, their full-year revenue was reported at zero, down from about $10.8 million in 2024 and $4.6 million in 2023. Before that, we're seeing figures in the low millions or even thousands going back to 2016. This tells me their income is likely tied to partnerships, grants, or small-scale licensing deals rather than product sales, since their main drugs aren't on the market yet. Biotech companies often burn cash in R&D before they hit commercialization, so this isn't a red flag, it's just the nature of the game. What matters more is their pipeline progress and whether they can turn those trials into revenue down the line. Moving on to earnings, let's see how Abivax is performing on the bottom line. Their 2025 full-year net income came in at a loss of about $322.8 million, which is a significant step down from a $176.2 million loss in 2024 and a $147.7 million loss in 2023. Earnings per share for 2025 were negative $4.65, compared to negative 2.80 cents the year prior. These widening losses are tied to heavy R&D spending and operational costs as they push obefazimod through late-stage trials. While it's not pretty to see red ink, this is pretty standard for a company at this stage. The key takeaway here is that they're investing heavily in their future, and if their drugs get approved, these losses could flip to profits fast. For now, though, it's a waiting game for investors. Let's dive deeper into their financial health by looking at the balance sheet and cash flow. As of the end of 2025, Abivax had a solid cash position of about $516.5 million, up significantly from $144.2 million in 2024. Total assets stood at $584 million, while total liabilities were $129.1 million, giving them a decent equity base of $455 million. Their current ratio is below 1 at 0.77, which suggests they might struggle to cover short-term obligations without raising more cash. But with over $500 million in cash reserves, they've got a runway into late 2027, according to their own guidance. On the cash flow side, operating activities burned through $155.7 million in 2025, while financing activities brought in a massive $531.9 million, likely from equity raises or debt. Free cash flow was negative $155.8 million, which again isn't surprising for a biotech in development mode. They're not drowning in debt either, with a debt-to-equity ratio of negative 2.04, reflecting more equity than liabilities. Overall, their financials show they've got the cash to keep pushing forward, but they'll need to deliver on their pipeline to justify these burns. Now let's talk valuation. At a current stock price of $108.37, Abivax has a market cap of roughly $776 billion. Their price-to-earnings ratio isn't meaningful right now since they're not profitable, sitting at a negative 28.95. Price to sales is sky-high at over 1,172, which reflects the speculative nature of the stock. Investors are betting on future growth rather than current earnings. Looking at forward PE estimates, analysts see potential for 2029 and 2030, with averages around 14.05 and 12.69 respectively, suggesting the market expects profitability if their drugs hit the shelves. Enterprise value is around $7.1 billion, factoring in their cash and debt. Honestly, valuing a biotech like this is tricky. It's less about today's numbers and more about the potential blockbuster status of obefazimod. If Phase 3 data for ulcerative colitis pans out in 2026, as some reports suggest, this valuation could look cheap. But if trials stumble, it's a long way down. Let's break down Abivax through a SWOT analysis to get a clearer picture of where they stand. Starting with strengths, their lead drug obefazimod has shown promising data in ulcerative colitis, a market projected to grow significantly in the coming years. They've also got a strong cash position, with a runway into 2027, which gives them breathing room to execute. On the weaknesses side, they're not generating meaningful revenue yet, and their losses are widening due to high R&D costs. Opportunities are massive. Analysts see multi-billion-dollar potential for obefazimod if approved. Plus, there's M&A chatter with giants like Eli Lilly reportedly circling. Finally, threats include clinical trial risks. If obefazimod fails or faces delays, the stock could tank. Competition in the inflammatory disease space is fierce too, with big players already established. So, while the upside is exciting, there's no shortage of hurdles. Let's take a look at Abivax's recent performance on the charts. Over the past week, the stock is up 5.11%, and over the last month, it's gained 9.69%. Zoom out to 6 months and you've got an 81.32% surge, while the one-year return is a staggering 350%. Over 5 years, it's up 800%, which is just insane for a biotech still in development. Compare that to the broader biotech industry, which is up 55% over 1 year, and healthcare sector gains of about 30%, and it's clear Abivax is outperforming by a mile. Now, short term, I'm seeing some momentum with that 30% spike on M&A rumors alone in early January 2026. If you're considering a short-term move, this volatility could be a chance to trade, but I'd be cautious. Rumors don't always turn into deals. Long-term, the chart screams potential if they deliver on clinical catalysts. All right, let's wrap up the heavy analysis with a look at intrinsic value. Since Abivax isn't profitable yet, traditional discounted cash flow models are tough to apply with confidence. Their revenue is negligible, and future cash flows hinge entirely on regulatory approvals and market adoption of obefazimod. Instead of forcing a DCF, I'm leaning on market sentiment and analyst projections. The forward PE ratios for 2029 and 2030 suggest the stock could be undervalued if they hit profitability as expected, with estimates dropping to the low teens. Based on this, I'd say the intrinsic value is speculative, but could be well above the current $118 price if catalysts like Phase 3 data and potential NDA filings in 2026 come through. Some analysts are predicting a 72% upside this year alone, as reported by Fool.com. On the flip side, without hard numbers to model, there's a lot of if in this equation. My take? The stock's price reflects high expectations, so you're paying a premium for the dream. Just know what you're signing up for.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, Join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.